Fantastic. Can you hear me clearly?
Loud and clear, Tom.
Great. Thank you for the extremely warm introduction. Much appreciated. And it's an absolute pleasure to be participating in this event. I think it's an extremely relevant and pertinent topic, entrepreneurship post-COVID. And I feel honored and privileged to be able to provide some input and some learnings from what our business has seen and the way that we've navigated the pandemic and the different challenges. And I hope to have an engaging and interactive discussion with the attendees and the people on the webinar. So yeah, thanks once again for allowing us the opportunity and for hosting us. So my preference would always be to have more of an interactive discussion. And I guess what I will then do is spend less time, talking about merchant capital and our business, and hopefully leave some more time for the questions and answers. I always found that that's the most efficient way to spend the time, and we normally always run over time with lots of questions and answers. So if you're happy with that as the host, I'll spend maybe 10 minutes just kind of talking through our business and how we've navigated the pandemic, and then we can switch over to questions and answers. Is that okay?
Fantastic, Dov. Sounds great.
Great, so thank you. So I guess some brief context and history. Our business, Merchant Capital, was founded in early 2013, late 2012. It was founded by myself and co-founders who have been serial entrepreneurs for most of our business career. As most entrepreneurs, we tried many ventures that unfortunately didn't work when we were growing up at school and university. And I think the point about that is, as long as you learn from your mistakes and the school fees that you learned while trying to launch those businesses, it's not a failure. And if you can take that into your next venture and use that as tools and learnings in order to try not make the mistakes again, then there's no such thing as a failed venture. And I'm sure all the serial and successful entrepreneurs on this webinar would be able to relate to that. Entrepreneurship is a broad definition. I guess it's in the eye of the beholder is what entrepreneurship means. In our world, entrepreneurship is taking a problem, finding a problem statement and try a real world problem, and trying to provide solutions. And by providing those solutions, you are making, whether it's your customer, your client, your partner, your employee, whatever it may be, it makes their life easier and it solves that problem for them. And I think in a very, kind of succinct nutshell, entrepreneurship would be that for me is finding real life challenges and problems and then executing on solving the problem. I think a lot of people talk about entrepreneurship where they talk about it has to be all about ideas, and I think we are all smitten by the Steve Jobs and Elon Musks and kind of Jeff Bezos of the world, where we think we got to have this grand idea where we're going to be able to launch a rocket to Mars or create an electric vehicle or whatever it may be. And I personally feel a bit different. I don't think your idea needs to be a life-changing catastrophic shift in trying to solve a problem. I think it's about finding a real world problem, and that could be anything, and solving it. And it doesn't have to be a huge grandiose idea that nobody's ever thought of. The trick, I guess, that most successful entrepreneurs will tell, if you kind of look back in your career, is it's all about the execution. So there's lots of great ideas out there. There's a host of great ideas. If you just go through your kind of universities and business schools or these accelerators or venture capital type of cohorts, lots of great ideas. And the challenge, or the successful ones, are the ones who are able to execute and operationalize that idea and make sure that they can actually fulfill in providing the solution. So obviously it has to start with an idea, solving a real world problem. But the execution and making sure that it's sustainable and operational is really where the magic happens. And I think if you look at the entrepreneurs that I mentioned earlier, the great ones of our generation, such as Elon Musk and Steve Jobs. Those guys were excellent, or they had teams who were proficient at execution and made sure that they could actually deliver on the problem that they were trying to solve. So that's kind of my synopsis on what entrepreneurship looks like, I guess, in our context. And I'm happy to talk about it because it's something that I'm personally passionate about a little bit later. So you're getting back to our journey. We founded the business on the founding principle of how do we provide easy access to working capital to SMEs and entrepreneurs in South Africa who are looking to grow their business. Without stating the obvious, the impediment to cash flow, or the accessibility to growth capital, said in another way, is the biggest impediment to growth. So if you look at, and I'm talking kind of pre-COVID levels, so I would imagine that these levels now are even more significant, but 8 out of 10 business owners are turned down for a working capital loan in the early stages of their business. And I just think that the typical incumbents, such as your big lenders or banks or whoever it may be, and not only in South Africa, but globally, are just not really well set up to be able to service, these very small businesses in the early stage of their growth. So as I said, myself and my partners who founded the business, we had been in the shoes of the entrepreneurs who we've been helping previously. And we just said, well, how can we make the life of an entrepreneur easier? What is the biggest impediment to growth? And yes, there maybe are 4 or 5 other things, but in our humble opinion, the access to capital and working capital to help grow your business in the early days is the biggest impediment to growth. So we try to solve that real world problem by providing an easy, frictionless, simple working capital loan in order to grow the businesses. So that was really the founding principle of Merchant Capital. And I'm proud to say that that has remained true, for the past 8 years. And we've had tremendous success in deploying working capital into the hands of the entrepreneurs and the SMEs in South Africa who need it most. And we came up with a product which was at the time innovative, and I think has remained innovative 8 years later, where the product is not structured as a typical loan. So it's rather structured as a purchase and sale of their future, at the early time, it was their future point of sale revenue or their card revenue. And essentially what we would do is we would factor their future card revenue and provide them a lump sum today, and we collect the RTR or the repayable over an undefined time. So what I mean by that is, unlike a traditional bank loan where you would have some initiation fees, you would have a fixed interest rate with the monthly debit order and a defined term, our product is a fixed fee up front. So we agree the cost of the product up front, which is transparent, with no initiation fees, monthly fees, processing fees. The business owner knows today exactly what the cost of the product is going to be. And then we collect the repayable of the loan through the term of the product, which is undefined. So in a very simple example, if we give a small restaurant owner, for example, 80,000 Rand, we would collect 100,000 Rand from them. So the 20,000 Rand is really the fixed cost that I alluded to earlier, which is agreed up front. And we will collect between 5 and 10% in this example of their future revenue in order to collect the 100,000 Rand. So to illustrate the example, whether it takes 3 months or 3 years to repay that 100,000 Rand, that 20,000 Rand fixed agreed upfront cost never changes, irrespective of the term of the loan. So the product or the repayment of the product directly fluctuates in line with how the business owner trades. So in good times when their turnover is increasing, we will collect more and the cash advance would be repaid quicker. But in slower times, when their turnover dips for whatever reason that may be, we would collect less. And all that happens is that the term of the loan gets extended without any additional or incremental cost to the agreed cost that we had up front. Now, I guess the recent pandemic, or the pandemic that we're in, the previous, call it 14 months, has been the biggest test of time for the principle and the foundation of our product. I mean, never in our wildest dreams 18 months ago would have we thought that whole industries would have been closed and shut down and almost come to a grinding halt for a couple of months. It just was unimaginable. And I guess as I said, the test of our product was to say that during the months that our clients, and we had hundreds and maybe thousands of clients that weren't trading, when the president declared the national lockdown 5 at kind of the end of March last year, and the majority of our portfolio was deemed to be non-essential, and they weren't trading. So those particular business owners, because their turnover was now zero, they weren't paying merchant capital back during those months. So it was zeroed out, and we weren't collecting revenue in our business, which obviously was a bitter pill to swallow. But it was true and testament to our product, and obviously we stuck to our product. And I believe that during those times, we really tried to help our clients, and we built some great customer loyalty and brand equity in that time, because we could have tried to change the rules of the game, but we decided obviously not to. So it was a big decision that we made. It was, in retrospect, unequivocally the right decision. And I'm really proud that we will be able to help, those few thousand small business owners who now, I'm pleased to say, have come back with a vengeance and are starting to trade at close to pre-COVID levels. I'm not talking about travel and maybe eventing. Those may be the two industries that will hit the hardest, but certainly the rest of our client base has managed to rebound very quickly and even more so. And I think what's been inspiring for me personally is to be able to see the resilience and kind of the optimism and just the not accepting failure of entrepreneurs and SMEs in our country. We've spoken about it quite often over the last year. We've written some articles and penned some stuff on LinkedIn, which you guys are more than welcome to go have a look at my personal profile page or our Merchant Capital page. But we've just spoken about the resilience and the tenacity of South African entrepreneurs. And, to be honest with you, it just inspires me every single day to see how our clients and just entrepreneurs in general have managed to navigate through this pandemic. And, there's lots of examples, so I'm not going to try and list all of them, but, just a restaurant, kind of up the road from me that we used to frequent, that I used to frequent with friends or with my wife for a date night, whatever it may be, they were deemed non-essential in lockdown level 5. And they just said, well, we're not going to take this lying down. We've got bills to pay. We've got staff we've got, salaries to pay, we've got mouths to feed, we've got school fees to pay, and we need to make a plan. And what they did was they kind of pivoted their business into a essential grocery store. So they started selling everything that was deemed essentials, and according to the government regulations, they could trade. And they developed a thriving business, almost a grocery store or like a quasi hardware, grocery, come get anything you want from an essentials point of view. And, it's incredible to see that today, that business is still going. They've reopened the restaurant alongside this essentials grocery store, but that business is still going. And they're not a client of ours, but I would imagine that if their turnover was, 300 grand a month pre-COVID, they probably now are at 500 grand a month, because they're still back to now the 300 grand through the restaurant, but their essentials grocery store is now delivering an additional incremental 200 grand. So that's just one anecdotal example of a restaurant owner that's close to our house, where I firsthand experienced the tenacity of entrepreneurship in South Africa. I think I'll talk a little bit about what we did as a business, and I think we were kind of on the front line, if I can say, or in the trenches, because the majority of our client base was deemed non-essential. 80 to 90% of our book was deemed non-essential. So, one could have panicked and looked at this business and said, we're in trouble and we don't know how this is going to turn out. So the strategy that we took was a little bit different. We kind of looked at this thing and we said, right, there are many unknowns that we don't know. There's no point in kind of stressing about the things that are out of our control, because frankly, it's just energy sapping and it's not going to help the situation. Let's rather focus on the things that are in our control. So what we did first and foremost was we made sure that our team, so the merchant capital staff, were looked after, healthy and safe. So what did that mean? We shut our offices immediately. I think we even shut the offices about a week before the president went into the national lockdown. We sent everybody to go work from home. And we made sure that first of all, that everybody was healthy. And secondly, that they were all technologically equipped to be able to manage and work from home. And I'm proud to say that, thankfully, we are a tech or a digitally enabled business. We were able to very quickly transition from the office to working from home. So that was kind of tick number one. We also reassured our staff at the time that, for so long as we had the power and we had the control, we were not going to be retrenching anyone, and we weren't going to be dropping anyone's salary. And I mean, you just kind of saw this panic in the rest of the world where, everybody was either being furloughed in kind of the Western world, or retrenched, or salary reduced, or whatever. And understandably, that brought a huge amount of anxiety into, our own team, including myself and our kind of executive leadership team. And it was just about kind of steadying the ship and making sure that, for so long as things were in our control, we would give a kind of a guarantee to our team that they would be well looked after. And I think that was, extremely important for me personally, because our team is our biggest asset. Our human capital is certainly, and our culture is our biggest asset. Then the next thing was, how do we look after our clients? Very, very closely linked to how do we look after our team. And as I alluded to earlier, we then took this, strategic business decision, which, as you can imagine, was not taken lightly, to say we need to give payment holidays to every single client who's deemed non-essential. And we sent out lots of communications, but we sent out an immediate communication to say, guys, don't worry if you're not trading. The concept or the premise of our product is that you don't repay. You won't have to repay for the month. So we very quickly communicated. We always say communicate bad news fast is the best way to do it. And we communicated very quickly to our existing client base that for those that weren't trading would have the payment holiday. We then kind of made sure that from a business point of view, and maybe I'm not giving you the exact chronological order, it was all done in and about the same time. We then made sure that from a business point of view, we had sufficient liquidity, cash flow. We made sure that our treasury was robust. We made sure that, all non-essential costs that we were spending at the time, we could kind of delay or cost or cut out any consultants that kind of wouldn't be of value for those particular months. We kind of put on a hold, and professional fees, etc. So we made sure that from a business point of view, we kind of stripped it down to as lean as possible, obviously without affecting the salaries or the remuneration of anyone of our team. And we kind of just brought it to let's keep it lean and mean, and make sure that we can afford to sustain ourselves for the next 6 to 12 months. And what we did was we presented to our board and shareholders a liquidity crisis plan to say, these are our cash flows. This is the worst case scenario. If this happens, we've got, and I'm just making up numbers now, 6 to 12 months of runway. If that doesn't happen, we'd need to look at another option. And we just really set out in detail what our liquidity and cash flow management plan. And I think it was a hugely useful exercise, because it gave everybody a sense of visibility and control as to the worst case scenario. And I think there's no worse feeling than just thinking about the unknown and creating angst and anxiety around cash flow and finances when you don't, but when you get down to the numbers and you actually scenario plan and you do some sensitivities around what those scenarios look like, it just gives everybody some room to breathe. Okay, so we've got this. This is the worst case scenario. In the event of that happening, this is the way we're going to operate. If it's better than that, it's happy days. It means that we've kind of performed better than we have. So I think that was, in a nutshell, how we manage the crisis from a merchant capital's perspective. The one thing that maybe I've left out, which is hugely important, is how do we manage the culture? How do we manage the energy, the mojo within our business in now, in this kind of work from home scenario? As I alluded to earlier, our culture and our people are our biggest asset. And we are a business that is energized by each other's energy. We feed off each other. We're an extremely kind of market-led business where we really celebrate the performers, and we ring bells and we celebrate, and we try and really create a culture of excellence and performance. And how do you do that on Zoom or Teams calls? It's very difficult. So we had to really think about how we kind of recalibrate this culture that we had spent the last 8 years or 7.5 years developing in an office environment to a work from home environment. And to be honest with you, we haven't solved that completely. It's kind of it's uncharted territory for everybody. I don't think anybody globally is kind of being has the answer to how you retain culture and energy and performance-driven culture in a work from home environment, because you're just communicating with people over video calls, and it's just not the same as all being together. So I would say that's probably been personally the biggest challenge. I think we've done pretty well. And what we've done there is simple things. Let's make sure that we all have our videos on every time we call, and not everybody loves that, but we kind of made it mandatory. Let's make sure that we connect at least once a week. We started a weekly quiz. Everybody in our business has now got into this quiz thing. We did monthly catch-ups where I would present back to the team as to how we're doing, what are the strategic projects, etc. We did Zoom dress-ups. We did, so we try to make it as fun as possible. Notwithstanding the fact that we couldn't, share a beer or a glass of wine or a whiskey together at the office bar. And I would say that has been the biggest challenge. To reiterate, I think we've done okay, but if this thing continues for another year or so, it's going to continue to be a challenge that we have to think about. And I think all employers, all entrepreneurs who have a team need to be extremely mindful. And on top of the fact that people sitting at home, it's very difficult to read their body language. It's very difficult to understand or take the temperature. We don't know what they're feeling. When you see someone and you go up to their desk and you say, how you doing? It's quite different to when they're sitting, with a fake background on a Zoom call or you can't even see their face. And I think a lot of people took financial strain. There was the health anxiety about getting the virus. Then there was the financial anxiety. Then there was this whole social anxiety. And, a lot of our staff, spouses or partners or parents or whatever, lost their jobs or had reductions in salaries, etc. So there was a lot of stuff going home. I mean, for those of us with young kids, for all of our sins, we had to do these online schooling. My little boy had just started grade 1. My oldest son has started grade 1. And, what a transformational time for a kid. It's his first year in big school. It's the first time he's wearing a school uniform, and now he doesn't even get to meet his new mates. He has to do it over Zoom. So I just think the challenges and the external anxieties that our team and obviously the rest of the country and the world faced were insurmountable. And again, I go back to the fact of it's just incredible how well we've all navigated that, notwithstanding how difficult this previous 14 months has been. So I guess that's in a nutshell, how I just wanted to share some of our stories, in how we managed it. And now to flip it or change gears for a minute. So we then kind of looked at this and we said, right, it is what it is, right? We're in this pandemic. We can't change it. There's not much we can do to control it, but there's certain things that we're luckier about. Number one, we're all healthy. Number two, we're fortunate enough that we can work from home, and our client service and productivity and efficiency can be the same, if not better. We have an incredible team of committed employees and a leadership team. And we have awesome shareholders, who are there to back us and make sure. We have, two of the largest banks on the African continent as our shareholders. So, if this was the time that we ever needed to kind of call in a favor or some additional funding from one of our partners, we had the ability to do it. And we had incredibly resilient clients, and together with our merchants, what we call our clients, was we were going to try and solve this and make sure that we actually came out of this thing, if not even better than we were before. I'll never forget, we had a kind of an exco strategy session in the early days, and we went around our exco, which is only 5 people, to say, what do you want to achieve after the strategy meeting? We were talking about the next 12 months. And I remember my thing, and I've repeated this to my team often, is to say in 3 years from now, so we now are a year down the line, so we've got 2 years to go. In 3 years from now, I want to turn around and I want to say, this COVID pandemic was the best thing that ever happened for Merchant Capital. And everybody looked at me and said, but, that's the most bizarre comment you could ever make. And I said, we need to make sure that we actually use this opportunity. There's a famous saying about finding opportunity in the chaos, and when the blood is on the streets, that's when you find the opportunity. And that's kind of what I meant is guys, let's hunker down, let's make sure that our business is sustainable and that we can continue servicing our clients and our team. Now let's look for new opportunities. Let's see where the opportunities are and where they're coming. And find opportunities in the chaos. So what did we do? We kind of looked at some adjacent products that we had always been quite keen to do prior to COVID, but never really had the opportunity for a whole host of reasons. The one that I'm going to mention is a medical funding product. So we have been, kind of toying around funding doctors and kind of healthcare professionals for a long time, but there were a few reasons that we never got there. Number one, we couldn't really compete on price with the big banks. Number two, we never had the distribution. Number three, doctors, as a kind of a client sector, didn't really need our money because things were going well. People were getting flu. People were coming in for operations. Never in their wildest dreams would they thought that there wouldn't be flu for a year, because people were sanitizing, wearing masks, staying at home, isolating. So nobody was going to their GP for the common cold. So as I say, never in these doctors' dreams would have they thought this would happen. Or surgeons, for example, so like elective surgery. Who would have ever thought that if somebody needed their wisdoms removed, their wisdom teeth, or a hip replacement that wasn't urgent, they just said, well, I'm going to just postpone this until COVID is over. So, that surgeon's business who was doing kind of non-essential or voluntary operations or surgeries, that business just came to a grinding halt. So there was never this kind of catalyst of an opportunity. So we used that to our advantage, and we were very privileged and fortunate enough to partner up with Discovery Health, who is obviously the leading medical aid provider in the country. And we launched a product together with Discovery called Well by Merchant Capital. I'm exceptionally proud to say that within 6 weeks, we worked very closely with the Discovery team, and we managed to co-create the product, integrate the tech into their back end, come up with pricing, come up with a market, a brand, an offering, and a distribution and execution plan within 6 weeks. And now you're working with a massive behemoth such as Discovery that has all the compliance and bureaucracy as they should have. And we launched this product, and we launched it at the end of last year. And I'm really proud to say that has been a massive success. So we have managed to assist doctors and healthcare professionals and allied workers, so physios or chiros or dentists, whatever they may be, with working capital in the time that they needed it most. As I alluded to earlier, some of these doctors or medical professionals turnover was down 70 to 80%. And it was just staggering to see how these businesses' revenue had just come to a grinding halt. So for the first time in their career or in their practice history, they needed a working capital loan to help sustain their business. So we've done exceptionally well in that space. And now it is a vertical that we are doubling down on, right? We're really thinking about how do we service and provide great product to the medical professionals as this COVID thing kind of evolves and we get into this new normal, I think, as everybody is calling it. So that's kind of one example of us. And I hate to use the word pivoting because it's such a kind of a Silicon Valley, venture capital thing. We didn't pivot our business. All we did was we took a step back and we said, right, these are the problems that we set out to solve. These are the clients that we've typically been solving our problems for. These guys are okay, but they've been hit by the pandemic. Who are the clients that we've always wanted to service but never had the opportunity? How do we co-create a product? How do we partner up with the likes of a Discovery? You know, how do we do things that are out the box and innovative and take advantage of the opportunity that presents itself? So I think in summary, what we did was, I think you have two choices here, or as an entrepreneur, business owner, or whoever, parent, school teacher, you know, community leader, whoever you are, you kind of had two choices. The one was, let me share in the misery of the rest of the world and kind of lie down and just take the punches on the head or get kicked in the teeth by this thing, or let me make sure, and obviously not disillusioned in the fact of how bad this is, but let me make sure that I can survive this thing, but how do I actually use this to my advantage? How do I look at this? How do I be a typical South African entrepreneur with resilience and tenacity? And how do I look at this opportunity and find opportunities? How do I look at this thing from a glass half full point of view, as opposed to a glass half empty? How do I, in 3 years' time, going back to my anecdote, how do I look back and say, you know what, COVID, it was the worst time of my life, but it was the best time. It actually turned out to be the best thing for me personally and my business. And you know, that was kind of the narrative that we really tried to cascade down into our business and into our clients. You know, and it's exactly the same message that we had for our clients: is, guys, use this as an opportunity. Clear out the dead wood. You know, if you had some people that weren't performing in your business, this is the time to move them on or restructure, whatever it is. If you had product lines that weren't working, get rid of them. Negotiate with your landlords. Time to get a better deal. Negotiate with your suppliers. Everybody, the only way people get out of this financial mess is if everybody feels a little bit of pain. Nobody can just say, well, I'm not negotiating. You know, the whole world was happy to negotiate. So use this to your advantage. Get a cheaper rent from your landlord. Downscale your offices or your shop space or whatever it may be. Cut your salary line. You know, if you can't afford, if you feel that you're bloated and you don't need everybody, get rid of whoever you don't need. Make sure that everybody in your business is essential. If you've been using a supplier for the last 10 years and you feel like they're overcharging you, tell them that it's time to renegotiate the contract. You know, and that's kind of the message that we said, is just use this opportunity to try and recalibrate your business, that when you come out of this thing, you come out of this thing fighting. So I want to kind of leave it at that, if that's okay. I want to make sure that, Simon, I'm not talking too much. I hope that's been a worthwhile introduction, and I'm happy to carry on, but it would be great to kind of get some initial thoughts or comments or some conversations going from the webinar attendees, if possible.
Sure. I'm actually very sad that you're stopping. That was such an excellent presentation. 10 out of 10. You gave us really a comprehensive breakdown of the realities of business, and especially from an African perspective. We truly appreciate that. As you mentioned, questions are permissible. You can simply raise your hand, we'll choose you and unmute you, and you can share your question. Alternatively, in the chat box, you can just type in your question. At times it's difficult to reiterate the point that you wanted to bring across, but you can type in your question, perhaps, if you're shy to speak up. But Dov, I do have a question for you. From
Sure.
The examples that you gave regarding how you managed to weather the storm throughout the COVID period. My question is, it's clear from your presentation that innovation results from collaboration, and you made a number of examples relating to that. Can you please speak to the importance of collaboration, especially in a period like this? You did give some practical examples as to what to do regarding rent, contractors, etc. But just on collaboration, how important is collaboration?
Yeah, Simon, I think that's a great point, and I'm happy to talk to that. I want to kind of take it into a different gear, if you will. I think the innovation and collaboration, is relevant and pertinent in a lot of different ways, right? So you can be innovative internally, so with your own team, and kind of give your employees in your team the opportunity to come up with ideas and kind of reward people for even making stupid suggestions. You've got to create a culture internally where you have a feeling that people are not scared to provide ideas because they're going to be shot down as stupid. So you want to create a culture of innovation within your business, because otherwise you don't grow. And we always say to our team, you're the one who are in the trenches. You are the guys who are speaking to our clients. You have the best visibility to actually tell us what our clients need. So what we've done in the past, just on one example there, is we've launched an internal Shark Tank. So I'm sure you kind of know the principle around a Shark Tank. So we essentially created a mock Shark Tank where we said to our team, come and present some ideas. There'll be certain judges or panelists on kind of the Shark Tank. We'll listen to your ideas, and if we like your idea, we will actually go and implement that idea in our business. And there was a prize and a reward if it got implemented, etc. So that's one way, and we did that, and we had great fun doing it. And there were some brilliant ideas, as you would imagine, because, as I said, these are the people who are talking to our clients every day. So, it's a lesson in getting close to your clients and making sure that you actually understand what it is that they need and what they want. Don't just assume that speak to them and keep asking, because those clients' needs will change. So that's the first one internally, and kind of manages the external about your clients. What I want to talk about as well is the collaboration or innovation in kind of partnering up with big corporates or large distribution partners. And, this is something that thankfully Merchant Capital and our team has managed to do successfully. And the two cases in point, which I'll talk about, is the first one, and probably the most exciting, is our collaboration with Standard Bank. So in the middle of 2018, we were fortunate enough to do a strategic equity deal with Standard Bank. They are extremely progressive in their thinking. They're really thinking about their clients and how they can partner up with businesses such as Merchant Capital to help better serve their clients and help better serve their products to their own existing clients. And we've been absolutely gobsmacked by the collaboration and the engagement that we've had with a big behemoth of a bank, which is such a large bank and has all the committees and risk and conservatism, being risk adverse as they should be as a bank. But we've managed to co-create a scenario and a partnership where we are able to bring our strengths into kind of their ecosystem and help better serve their clients, with clients. And it's been an incredible partnership. And we have, 2 or 3 or 4 products now in different product streams where we collaborate with the bank, which has been extremely successful. Now, I guess, the one question would be, how do you do that? How do you find yourself in a position to partner up with a bank such as Standard Bank or a big incumbent such as that? And I think that there's no secret sauce, like with everything. There's no silver lining or one thing that I'm going to say, but what you need to do is you need to take a step back and you say, what can we offer that can make, the proverbial boat go faster within the bank? How can we help really try and collaborate with this bank to make sure that our strengths, can kind of be incremental to what it is that they are trying to do. And that's really been the premise of what we've tried to do. And then it's all about execution. Make sure that you can give them demonstrable evidence that what you say you're going to do, and you're going to overperform. So what you want to do is under promise and over deliver. And then once you create a little bit of track record and trust within that environment, then the opportunities start coming your way, because they're now saying, well, hold on a second, these guys actually can deliver and they can execute, and it's not such a risk. And it just creates a sense of trust and a mutual, strong mutual value proposition. I think the other very important thing is you need to find someone within the bank that is going to be your internal cheerleader or champion or sponsor, I think is they call it in the bank. And that person needs to, kind of implicitly believe in the mutual value proposition, because there's going to be lots of naysayers within the corporate. That's just kind of the way that it's set up. And you need this internal promoter or cheerleader or evangelist, whatever you want to call them, to actually go and fight your case and say, but hold on a second, it makes sense for us to partner up with these guys because of X, Y, and Z. And, without that person, it's very difficult to get these approvals, because I can't go into the bank's risk committee and kind of promote merchant capital. I just simply wouldn't be invited into those forums. So it's about finding an internal champion, making sure that the mutual value proposition with that internal champion is so robust, and feed them with information, that person or that team, whoever it may be, to help fight your cause within the bank. And then be patient. It took us, I often use the saying that it's taken us 8 years to create an overnight success. You got to just be patient. Things don't happen overnight. We started the conversation with Standard Bank probably 3 or 4 years. Yeah, it was definitely 3.5 years before we actually landed the deal with them. So you got to be patient. You can't rush these things. I think we as an entrepreneurs and startup businesses just want instant gratification. We want to just get going and do a deal and just build revenue and keep on going. And with these big banks, that isn't feasible. You need to be patient. You need to understand their processes and just keep at it. Don't give up. Always find a way. Be entrepreneurial. So that worked within the Standard Bank environment. And then obviously the Discovery partnership, as I alluded to earlier, was born out of the school fees and I guess the track record that we had built in doing such a thing with Standard Bank. So that's really important, and it's something that I'm really passionate about and happy to talk to kind of founder entrepreneurs who are looking to scale their businesses. Because what you would find, certainly in our business, the only way to truly scale our business is through big strategic partnerships such as the likes of Standard Bank and Discovery. And I'm sure lots of businesses, similar to ours would have the same problem statement that they would need to solve.
Sure. That was extremely insightful. You gave us the ins and outs in terms of what one needs to do if you want to secure partnerships that will, there's 2 ways of scaling: through funding and through partnerships. And you made that quite clear. I have a question for you just regarding the longevity of merchant capital. Generally, startups only last for, I don't know the stats, but it's pretty obvious that obviously entrepreneurship is not easy, and most of startups fail within the first few years. Yet your business has demonstrated some resilience, which is commendable. And so you've been generous with the information that you share, and thank you so much for not holding anything back. I think the key insights that you're giving are quite practical, and we are going to make this link available, especially to those who are having connection problems. And just as a note, we are receiving the messages that some of you are struggling to log in. We will make the link available for you to be able to view it at your own leisure. Dov's input so far has been quite phenomenal. The points that he has been sharing are quite practical, especially from a business point of view. But just going back to my question, Dov, what has allowed merchant capital to be so resilient and sustainable up to this point, from when it started?
Yeah, I think it's that's the golden question, right? And I think there's no one size fits all. But there's a couple of things that I will say. I mean, having tenacity, having thick skin, having resilience, all of those things are imperative, to be the founder of a business, because you need to, there's going to be ups and downs, and this whole entrepreneurship thing is a real emotional roller coaster. So you need to have real tenacity, resilience, and thick skin. So that's the first thing. The second thing is make sure that you've got a team around you or partners around you who believe in your vision, and who are aligned to what it is you're trying to achieve. Because in those dark days, and when things aren't going well, or when you didn't land that big deal, or that client, kind of went to your competitor, or whatever it may be, if you don't have a shoulder to cry on and someone to, help support you, and that could be a spousal support, it could be family, it could be friends, it could be a business partner, whatever that may be. You can't discriminate. You take what you can get. You really need that support, because you can't do this alone. And I can tell you, without my partners and my business partners and my wife, and they've picked me up when things have really been tough. So I think it's a journey, and it's an emotional roller coaster that you need to acknowledge. And there are going to be ups and downs. There's going to be lots of downs in the beginning, and you need to be able to pick yourself up. I think the way you do that is you need to know what your North Star is. So you need to, when you start out, you really need to be clear on what it is you're trying to achieve. And you need to make sure that you actually write those down. What are my values? What is my vision? And I know all of this sounds like theoretical university stuff, or something that you'll learn in an MBA, but it's there for a reason. It's cliched, but it's a cliche for a reason. Because in those dark days, if you don't know what that North Star is, it's very tempting to kind of just say, I'm just going to give up. This is just too hard, or I don't have the energy to do this, or I'm just going to go back to a kind of a comfortable corporate paying job where I leave at 5 p.m. and the problems aren't my problems. Entrepreneurship, you're up at 4 o'clock in the morning worrying about the problems, and you want that, right? You wouldn't want to have it any other way. So I think the founding principle, or those core values, or the North Star, whatever you want to call it, are fundamentally important, because that will help navigate you when it will be your compass, when times are tough. And also when you hire people, it allows you to share and cascade down, what it is that you are trying to achieve. And everybody, when they have a bad day, are able to kind of relate back to that North Star. So those would be the couple of things. I see there's some questions coming through, and I know we've only got 5 more minutes or so. So I want to stop there, but those would be the fundamental things that I would advise.
Okay, perfect. Well answered, Dov. So we have a question from Amber. Amber, I'm going to unmute you. So if you're able to, you can ask your question live.
I think it's Alicia, not Amber. Okay.
Oh, sorry, Dov, I sent a direct message to Simon.
Oh, okay. Sorry.
You spoke about businesses that pivoted during COVID and kind of lent into it. What are your thoughts about the longevity of businesses that started to solve a COVID problem? For instance, like hand sanitizer manufacturers, they're obviously quite large setups.
Yes.
What do you think about how long they'll last?
Yeah, look, I think that so that's a great question, Amber. You would have to commend those people who created those businesses in a time of need. So people who were supplying hand sanitizers or PPE equipment or face masks, whatever it may be. The short answer is, I think the businesses who were able to incrementally add that to their additional businesses will have longevity. So if you were, I've got friends who are big manufacturers of plastics, so general plastics. They do stuff for Pick and Pay, no-name brand, and the bottling and stuff like that. Now, during COVID, that business was dead. So what did they do? They pivoted or they added a production line to do hand sanitizer bottles or whatever it may be. So that kind of business will be sustainable, because eventually we're going to move away from needing hand sanitizers, but that business managed to sustain their own business by creating an additional revenue line when their existing revenue line or their existing product line wasn't working. I think the businesses that would set up specifically to do hand sanitizers for COVID and they have nothing else, they would have a problem, because now they've got a sunk cost, and they would kind of need to find another way to fill that capacity. So I think that's a great question. It will be interesting to see what actually happens to those type of businesses.
Thank you very much for that, Dov. So now we can take Alicia's question. Alicia, you've been unmuted. Do you feel comfortable asking live?
Hello. Thank you very much for your speech, Dov. I just
Sure.
want to know if you can tell us your opinion on bureaucracy and its impact for potential entrepreneurs in Africa. Other countries where it is easier to start up a business from this point of view, do you think that it's improving?
I think that's a great question, Alicia. Thank you. And it's all relative. So bureaucracy is relative, and depends on what you're trying to achieve. I think bureaucracy in emerging markets, in countries such as South Africa and the rest of the continent, is always going to be there. It's fundamentally part of the fabric in these type of countries. And the real entrepreneurs are the ones who are able to navigate bureaucracy and find a way to get the bureaucrats really to assist and support them. Now, what does that mean? That means trying to launch a business or a product where bureaucracy won't be the ultimate hurdle. There's always going to be bureaucracy. We've had it personally in our business, doing big partnerships with the likes of the banks and the medical insurers. We've had to, grow up as a business and be compliant with a lot of their, bureaucracy requirements. But it made sense in the greater scheme of things. Is South Africa more bureaucratic than other countries? I can't really comment, because we haven't launched businesses in the rest of Africa. But the one thing I can say is that supporting entrepreneurship and SMEs is extremely high on the agenda of our president, and you're seeing lots of great initiatives by the organization called SIFA. There's the SME fund, which was kind of been run by Adrian Gore and some of his colleagues. So there is great support, for entrepreneurs, and whether in practice that turns out to be anything, time will tell. But I think we've got the right messages from the right people, and without the SME or without entrepreneurs growing in our country, it's going to be very difficult to create the economic activity that we need in our country. So I think all the right messages are there. I can't comment on the rest of all the other countries, but I'm hopeful. I'm optimistic that bureaucracy won't kill entrepreneurship in South Africa.
Thank you very much for that, Dov. Alicia is smiling, so she's very much happy with the answer that you gave. It was very comprehensive. And so, Dov, we look forward to hearing from you again soon. We just would like to ask you, if people want to get in touch with Merchant Capital, how can they reach Merchant Capital, and what support do you provide for entrepreneurs, small businesses, etc.?
Sure. So again, Simon, really thanks for having me. I've thoroughly enjoyed it. The hour has gone extremely quickly. I wish we had some more time, and we would love to do this again if the opportunity presents itself. So Merchant Capital can be found on the web at merchantcapital.co.za. And one would be then invited to communicate through different mediums, depending on what their preference may be. And really any entrepreneur who has a business, who has been trading for kind of 6 to 12 months, who's looking for growth capital, should get in contact, because that would be our sweet spot. We don't fund startups, so it's not for an idea that is looking at, there needs to be some sort of track record. As I said, around 12 months of trading history, and that we will then go through the process of trying to see if we can help that particular entrepreneur. So we look forward to hearing from anybody and everybody.